Thanks for joining us at xm.com for the weekly Outlook. I'm Cristina Marujos, and joining me today as Senior Investment Analyst Rafi Boyajian. We'll be having a look at this jam-packed week regarding data, starting from preliminary PMIs from the Eurozone, the UK, the US, Australia, and Japan. Of course, markets will be eyeing the preliminary PMIs for any signs of the corona outbreak might have affected businesses outside of China. So do you think this outbreak could have taken a toll already on these economies?
Well, it's certainly possible we will see the initial impact from the coronavirus outbreak in those preliminary PMIs for February. In January, we had seen a bit of a global rebound in manufacturing activity, and that was taken as a positive sign about the global economy, but particularly in the Eurozone, where growth there had been sluggish for most of 2019. And so if we were to see growth weakening again in February, that could really upset the euro, which this week has tumbled to near 3-year lows against the US dollar. We're seeing increasingly gloomy outlook for the eurozone, so those PMIs will be very closely watched. If we see anything more than a slight drop in manufacturing and service PMIs in February, that would certainly not bode well for the single currency. In the UK, we're also expecting weaker PMIs there as well, but the pound has other things supporting it as far as the UK economy and the UK outlook is concerned. So we're not like to see as much of a drop in the pound as we would see in the euro from any negative surprises. But given that we're going to have PMIs for many countries, including the US, Japan, Australia, as you mentioned, if there's a negative trend there, that would certainly heighten fears about the coronavirus and its impact on the global growth, and that would, of course, push up risk aversion in the markets.
Now, let's turn to the rest of the data by having a look at Australia, which has been plagued by the bushfires, which have yet to appear in the data. Now, we have wage growth figures out on Wednesday and the jobs report out on Thursday from Australia. Do you think we might see the first signs of the effects of the bushfires?
Well, the wage growth numbers, those will be for the fourth quarter, so we are likely to see a notable impact there. In fact, wage growth is expected to hold steady at 2.2%. That's in line with the RBA's forecasts. And as far as the employment numbers are concerned, we are expecting softer growth in January. If we see a bigger drop than the forecast of 10,000 new jobs during the month, that would definitely raise some concerns about the Australian economy and also question the RBA's own forecasts, which so far they've stuck to somewhat rosy picture about the Australian economy despite the bushfires, despite the coronavirus. And the RBA's neutral stance did help the Aussie stabilize from its recent declines. So any concerns about from those employment numbers could see the Aussie resuming its downward trend.
Now, Japan posted impressive growth rates in the first 3 quarters of 2019. However, that narrative seemed to change in the last 3 months of the year. What are we expecting in the GDP report out on Monday?
Well, we are expecting a dramatic turnaround for the worse for the fourth quarter. GDP likely contracted by 0.9%. That would make it the worst performance since 2014 when we had the last sales tax hike. And of course, in October, we had the last phase of the sales tax increase. Now, consumption had been supporting the Japanese economy during the first 3 months of 2019, but following that sales tax increase, it's likely consumption deteriorated. And of course, we had the ongoing trade tensions with exports continuing to slide. So on the whole, Japan's economy did not do well in the fourth quarter. But as far as the yen is concerned, it's not likely to have a huge impact on the yen. In fact, it may even boost the Japanese currency if the negative data adds to the overall risk aversion in the markets. And of course, Japanese yen being a safe haven currency would gain on the back of that.
And finally, let's have a look at the UK, because it will have a very interesting week this week, because it's getting its first batch of economic data after the elections and after Brexit. Are we expecting to see a turnaround in the numbers?
Well, we may see a turnaround in retail sales, especially. Of course, we'll also be getting inflation and job numbers as well out of the UK, in addition to those flash PMIs. But the focus will be primarily on the retail sales numbers, because consumption is a very important component of the UK economy. Retail sales had been declining since the summer, and so a rebound, positive growth in January would definitely confirm the view that the UK things are getting back to normal in the UK following that decisive election outcome in December. UK economy stagnated in the final 3 months of 2019 as a result of that Brexit chaos. So retail sales numbers, if they are positive, they would definitely help the pound extend the gains it's made so far this week.
Rafi, thank you for joining me
Thank you.
today. And thank you for watching the Weekly Outlook here at xm.com.